We believe that wealth is a journey, and that this is your jumpstart to trading success. Hello everyone, and welcome to the all-new Traders Mind Chat show, where we believe that wealth is a journey and that this is your jumpstart to trading success. I'm your host, Mike Lamothe, and I am joined by my beautiful co-host, Melissa.
Hi everyone, I'm Melissa and I'm so happy to be a part of the Traders Mind Chat show. I am an author and entrepreneur, and I am here to give the beginner perspective on trading as I am co-writing a book with Mike. Book number 2, which I still can't believe, the Narrow Mind Shift Guide was published on your birthday on November 4th, right?
Published on my birthday, and also my wife, and she pushed me to do this book. That book was originally going to be this little 5-page document, and now it's a 70-page book, like many months later, and I couldn't have done it without her help.
Oh, thank you. I could just do a rewind,
Yeah, right?
rewind. Keep hearing that all day. But we had a great show for you guys today.
Well, why don't you tell us some of the stuff that we've got going on?
Okay, so we got 3 big things going on. The first is it is the beginning of 2021, a new year. Bye-bye 2020, good riddance. We're going to be talking about some new year trading resolutions. And then number 2, we have an amazing guest coming on today. His name is Gregory Gossett. He's a full-time equity trader with 25 years of trading experience. He actually hosts a daily YouTube podcast called Gossett Trading and Mentoring Live, and he has a pretty interesting backstory, Mike. I'm pretty excited to hear about this small chewing gum company that he sold.
A small chewing gum company like turned into this massive what is it, Dicam?
I believe so. Yeah.
The regular hiker and does so many outdoor things. Just really interesting guy.
Yeah, so
can't wait to talk to him in a little bit.
We're gonna dive deep into his background and how he got into trading, and we also will do stick around, because at the end we'll talk about the top key highlights that we got out of that interview with Greg. So be sure to stay tuned till the end of the show. All right, great. So let's dive deep into New Year resolutions.
Yes.
So one of my New Year resolutions was to join the Traders Mind Chat room. I know.
Yeah, it's about time.
How many years? Finally, I'm there. I'm so happy. So if you're in the room, be sure to say hi. So excited to be on. But glad that Mike was able to walk me through. But it was pretty easy to get on. Mike just want to fill them in on how to do it.
So we have this room on StockTwits. It's a global community. If you're not familiar with StockTwits, they're kind of like the Twitter for people that trade stocks. And we have a room on StockTwits that's called the Traders Mind Chat Room, where traders come in and we dive deep into all things trading, not just trade ideas, although there are trade ideas, and I share my open positions. I share the trades that I'm going to take next, and share all the plans and insights and all that stuff in there.
And I love that you actually come on into the room on a daily basis. So as people are sharing in the community, Mike's actually coming in too and chiming in about some of the trades he took. He said one of the ones you just did was
when we were talking before, this idea, right? PDD that is up 20% in the past 5-6 days. Another one, Freeport McMoran, ticker FCX, that today it's up about 8%. And so these are ideas that are being shared in the room, but it's not just oh, buy this, sell that. It's given the rationale of why I'm doing what I'm doing, so that way people could have a deeper understanding. And we're not just talking about trade ideas, it's also talking about mindset, it's also talking about position sizing, risk management, dealing well with emotions during trades, right? Hope, fear, and greed. Those are the 3 big ones that tend to hurt traders both mentally and physically in the wallet.
Not just in trading, unfortunately. Many aspects of life.
But yeah.
But it's great
So-
because you really do get that sense of community, and so I'm very happy to now be a part of it. And so that was my New Year resolution. And I guess one of the things that you had posted on the room, Mike, I saw was that you wanted to create this personal manifesto. Can you go into a little bit more detail about that?
Yeah, so we also have this Mara Elite program where, we're meeting every week on the weekends, and we're doing this whole deep dive where we go through market analysis, finding ideas, picking them apart together. People are asking questions. It's a very engaging session that we get together for every week. And I wanted to give more to this program. And again, that started out as a very simple document of here's the rationale of dissecting or taking a look at the 10,000 stocks in the universe that you could buy, and narrowing the field down to just a handful that you're actually going to put your hard-earned money in. And I wanted to give or create a document that would fully explain this rationale, so that way people could come in and get up and going very quickly. So that's what this is now becoming, like a manifesto or a
And then
guidebook.
enter me. And I was like, oh, let me give you some feedback on this. And now you're going to take this manifesto and turn it into
Yeah, well, it was
a project.
Yeah, it was maybe 2 or 3 pages. Now it's a much more significant document that's giving the philosophies, management plans, and everything else. So what the main goal is just create the most value for the largest number of people and help people succeed at trading.
But I think this is such a great example for when we set our own New Year resolutions for trading. Like I said, outlining and creating something that is actionable, that you will reach these end goals. What is one key thing that you would recommend that new traders do in order to reach some of these goals within the new year?
I think that they need to first get clarity on what it is that they really want, because what can happen so much is that people come to the market, and why do you come to the market? You want to make money, right? That's the end goal for everybody that trades, right? We want to see the account going up, but many come out with a goal of, say, I want to make 10% returns every single month, right? So that 120% returns annually, and they have that goal right off the bat, and without considering what does it actually take to achieve that goal. Well, what do I need to learn? And so once they start, what I would recommend is getting clarity on what it is that you really want, because you might say that you want that, but then when you start to dig a little bit deeper into what it takes to achieve those level of returns, you might think that, oh, well, I need to be studying morning, noon, and night to be able to achieve that right now. Right? Somebody else might have a goal that they want more free time with their trading, and that's actually one of the things that I started with when I first started trading, or when I finally started to turn the corner of my trading. I've been trading for a little over 20 years now, and it took me 10 years to finally turn the corner. One of the things that changed when I finally turned the corner was starting to think through, well, how can I both be profitable in the market, right? Start to have the equity curve moving in the right direction. How can I be consistent, and how can I do this given my current lifestyle? And back then, that's when I was still working the 9 to 5, and I was still in grad school at the time too. So trying to fit trading into all this.
Oh, I know, it's so tough trying to handle so many different things. And for working parents out there who are trying to do trading on the side, we completely understand what you're going through. One of the things that we'll be talking about throughout the year are ways that we can manage our trading lifestyle, and those are great things that we'll be able to do because it's firsthand experience of what we had to go through. And I think one of the great things that, when we were publishing this book on November 4th, we knew Mike, that was the deadline. And that's what we knew, that no matter what, we wanted to make sure we published this book on November 4th. So having a deadline of some sort will help you achieve those goals. And I think that it kind of like forces you to work harder, find time in your day to keep reaching, keep achieving some sort of step toward that goal so that you will reach it.
Deadlines definitely help. But that said, deadlines need to be significant. Like if you just have an arbitrary deadline, it's easy to kick those down the road a little bit, right? Like,
guilty of that too.
But with this and publishing it on November 4th, for me that was significant because it was my birthday, and I'm like, I want this to be out on that day, and so like even that, right?
The pressure was on.
Like some people might be watching this like, oh, a birthday, like who cares? To me, it's important, and it doesn't matter like, well, what's important to anybody else. So long as it's important to you, and is truly significant to you, the date that you're selecting, then you'll have that strong emotional tie to that to start to make things happen.
I can't agree more. And as I am now co-writing this book with you this year, I now will be outlining what I need to do in order to reach those goals. I think you're making small goals so that you feel like as you're actually reaching them, you feel like, oh, I reached this goal. Like, hey, I finished chapter 1, and then you can feel like, okay, I can do more. And I feel like it's something that, because if you just publish a book, or I'm going to make $1 million this year, it feels like so far reaching that you're not even going to start because you just think it's impossible. I'm never going to get there.
Yeah, well, the first hurdle that you encounter that could easily knock you off track if it's just so far out there and you don't have a solid game plan on how to achieve it.
So Happy New Year to you guys, and we have an amazing guest who will be joining us in just a couple of seconds. So stick around. Greg Gossett, equities trader for 25 years, and make sure you find out about this chewing gum company. I can't wait to hear about it, Mike.
Yeah, me too.
Yeah, stick around for the end where we'll also have that wrap up for you. So see you in a little bit.
The sponsor of today's show is Magic Mind. I've been using Magic Mind these last couple of months, and it's a quick energy shot I drink either in the morning or in the afternoon to give me a boost. They only use healthy ingredients, and I think it's great. Check it out for yourself at magicmind.co/discount/MARA15 and use coupon code MARA15 to get 15% off your order. All right, we are live. Welcome back, everybody, to the Trader's Mind Chat show, where we believe that wealth is a journey and that this show will help jumpstart your success into trading. Today, we've got an incredible guest with us today. Super interesting guy. I can't wait to dive into his story. Gregory Gossett, from learning about your chewing gum company in your early 20s to now trading and geez, there's so much that I want to pick apart from just from your background. Thank you for being here on the show. It's awesome to have you.
Thanks, Michael. I appreciate you having me on. It's an honor, and thank you for writing your great book. I just recently read it, and it's honestly been helpful for me. I mean, I've read so many trading books, and this book it's refreshing because it's interactive, and you have to write, and you really have to think, and so I really gained some benefit from it already, and I just recently read it.
Oh, thank you. I really appreciate that. Well, what were some of the insights that you had from it?
Just how you approach trading, your motivations, not trying to predict where the market's going. You always have an idea and theories about where the markets are going to go, but just let the market do what it's going to do, and just all the exercises that you have, and how you view trading, how you view your relationship with money.
That's such a big one for a lot of people that goes way under the radar, and it did for me for ages as well. And yeah, that's thrilling to hear. Thank you.
And just mainly your beliefs about trading, your beliefs about the market. And we all have so many different kind of beliefs, and how those beliefs obviously affect your trading.
Absolutely. Man, well, we were talking a little bit beforehand about some of your background, and you actually just gave a really good jumping off point into some of what you've studied already too, and some of the traders that you worked with. Can you tell us a little bit about what you learned with some of those other traders? You mentioned Dr. Elder was somebody that you worked with.
Yeah, well, I mean, just to give you a little background, maybe leading up to that question.
Okay.
When I was in my 20s, I was a professional triathlete, and I had an idea for a chewing gum for something that would help me in my racing. And I had it developed, and it turned into my little chewing gum company, turned into this big company. We developed a product called Zicam, which is a cold remedy. It's very popular, still is actually. And, the company became really big, and we were fortunate enough to, somebody took us public, and we did really well. And so, at a young age, I thought, well, I'm going to have to find kind of a new career now that I'm done with this, right? I was fortunate in that sense. And a friend of mine had a little automated trading program that really interested me, and that's what got me into trading. And it was a bad combination. I was young, aggressive, I had no fear, and a lot of money, and I got into trading. And initially I did well, and I thought I was some kind of natural born trader, but it was luck. And the chickens soon came home to roost, and I lost a tremendous amount of money in a short amount of time. And I actually went and walked the coast of Oregon that summer because I was so distraught about it. And
oh my God, how long did that take?
About 3 months.
Wow.
Yeah, about 3 months. And I just decided on that trip, I was like, I like to trade, but the reality is I don't know how to trade. I've been lucky. I don't have a trading plan. I don't have rules. I don't account for position size. I don't account for anything. And so on that trip, I decided that, listen, when I get home, I'm going to start approaching some famous traders and authors, and I'm going to beg and plead for them to teach me what they know. And so,
and all this was coming to you as you're walking along the trail.
Yeah. On that walking trip. And so, I started doing that. I started seminars, read many books, and then I started working one-on-one with different authors and well-known traders. And I learned a tremendous amount from each one. And, I didn't learn one thing that was great from one and not one from the other, but just different things, right? So that I had different tools in different kind of markets. And, I've studied with Steve Burns, who is now a very good friend of mine and just a great trader, great author. Dr. Alexander Elder, I've worked with him one-on-one. He's very famous, and learned a lot of great things from him. And a man named Terry Lavorne, who is a great trader. I've learned so many things from him. I've worked with Larry Williams way back in the day. So, I took whatever I learned from each one of these gentlemen, and I just have brought it into my trading and made all the different types of approaches work together. And, that's my own trading style now. But, we were talking about Dr. Elder, and, Dr. Elder always taught me, he said, your job as a trader is to buy stock from people that are that are depressive and just want out. But your job also is to sell to traders that are just manic and want to buy at any cost, right? And that really stuck with me. So, we were talking a little bit about playing offense and defense in trading, but so, the large majority of my time and my research into trading comes into exiting positions, both to the upside, into strength, and then downside into weakness. So, but that's a little background of, how I got started trading.
Oh man, there's a lot to dissect it in there. Like even with like so with the current environment that we're in, I'm really kind of chomping at the bit to want to get into like the offense and the defense. Knowing your background, um, what are some of the strategies that you've developed to sell into offense, or to sell into strength?
Mhm.
Um,
Well,
Markets at fresh highs. I think that's kind of a
I base all, I base everything on like today's close. I base it on the previous day's close, and a certain distance, a certain ATR value above today's close is where I will put in profit targets for the next day. I usually put in 3 profit targets. I put them in at 0.45 ATRs from the previous day's close. And I put 3 in there, and sometimes I hit once and sometimes I hit 2. Today I hit 3 on one, which was great. But I'm a firm believer in taking off profits when the market really wants to give them to you. Otherwise, if all you're doing is using trailing stops, then you're always selling into weakness. You see what I'm saying?
mm,
And in any sports team, you need to play offense and defense. So I don't take huge parts of my position off when it goes up, but I just take partial profits. I lock them in, put the money in my pocket. And what's nice too is, as a stock's moving up, as you're taking partial profits, if you do get a big down day like we had yesterday,
mhm.
then you've already taken part of your position off, which mitigates a big down move because it's not with your entire position. And you might say, well, if you start scaling and it keeps going way up, then you sold some lower, which is true. And I'm happy to. But again, it's not the full amount. But it all comes back to Dr. Elder saying, take some off when the market gives it to you. When people really want to buy something from you, sell them a little bit. So, that's my offense. The defense is, the procedures I have in place for my trailing stops, whether it's closes below previous day's low, whether it's rejections of RSI levels above or rejections of moving averages. It's quite complex, really, how it all fits together.
How do you keep track of all that, all those rules and everything that you have? Do you have it like laid out in a spreadsheet? Is it automated like the first uh, system that you had? Or how do you manage all this?
I just do it myself. I've done it for so long. It's just, second nature. And of course, I teach. I teach trading, and I teach it to students all the time. And when you teach something, you really get it yourself. So, but I don't really think about it. I mean, there's different approaches with different strategies, whether they're deep dip buys or whether they're more trend trades or whether they're mean reversion trades. Um, but it's just something over the last 25 years that I've finally been able to just put together.
I know the feeling. Do you still like go back and try to or I guess do like a post analysis and to continue to see like how things are working, or like testing other kinds of rules, or do you do any kind of exercises like that?
Yeah, I do. As a matter of fact, last fall, I made some pretty significant changes to some of my trailing stop rules. So,
Interesting. Well,
you know,
what were you doing and what are you doing now?
now I'm giving it just a little bit more room. I'm taking off less than I did before, just to account
Mm,
for, like an initial correction. But
right.
sometimes that initial correction is just a dip that continues to keep going. So I just adjusted and took less of my position off. I do a lot of taking half of my positions off. Take a half, take another half of the half.
Ah, take a half and then take a half of the half. That's interesting.
So
I
you get a
just went
quarter.
through a very similar exercise myself towards the end of the year. We did a whole back testing boot camp where I had a set of rules, and then I wanted to tweak individual variables to see what would have happened had I managed the trades that I took in a different way. And
Yeah.
one of To your point too, and to like giving trades more room, I ended up taking. I ended up switching to a strategy where I would sell half at my main target, not sell anything below my break even, and the results ended up increasing by like 50%.
Yeah, wow.
It just by giving trades a little bit more room and not being as aggressive with my selling. Prior to that, I was taking a little bit off at 1R, a little bit off at 2R, a little bit off at 3R, very similar. And you know, like I still want to go back and test it under like 2020 was an insane year. I want to see like what it would have done in 2019, in 2018, and have different
Yeah.
other market conditions to see.
Yeah. I mean, 2020 was kind of an anomaly, and I think you'd have to look at a longer data set, you know what I mean, because it may have just worked well in 2020, but not over the long run. But who knows, right?
Yeah. How do you test your strategies when you're doing that? Are you doing it manually? Are you doing it with software?
Um, a lot of my moving average crossovers or my deep dip buys where I use the 200-day moving average and 250-day moving average, I have software, etfreplay.com, which is what I use. I think they're really good. And, I know if I take a crossover, it doesn't mean that particular trades has to be a winner, obviously, but I know over the long term that approach, whether it's crossover or whether it's the bounce or close under and back over the 200-day moving average, I know that big picture wise, it is a profitable approach, at least up until this time. Doesn't mean it has to be in the future. But yeah, I use ETF replay for my crossover trade back testing and for my deep dip by back testing.
ETF replay. Have to remember that one. I haven't. I'm not familiar with them. I got to check it out.
Yeah, etfreplay.com. It's really good. It's like large financial institutions use them, but you can quickly do all sorts of back tests, and I really like it. Steve Burns is the one that turned me on to etfreplay.com.
Steve Burns. I love him too. He's a great guy.
He is great. I mean, he's taught me so many things. I probably drove him crazy studying with him, just the millions of questions that I've asked him. But he's such a great guy, mellow guy, great author, and a great trader. He just had a second edition of one of his books, Moving Averages 101. He was kind enough to ask me to write the foreword on it, which was a real big honor. But yeah, he's a great guy. I've learned so much from Steve.
So how about trading with multiple time frames? That was something else that you mentioned that you do. What time frames are you considering, and how do you use them?
Well, just kind of big picture, I think it's important to spread your trades over many different time frames and many different trading approaches. So you get all sorts of diversification, both in time and your approach. So I take, at the end of every month, as long as there's a setup, I'll take a trade on the monthly bar, right? Which I could be in that trade 3, 4, 5, 6 months, right? Every Friday, I look to take a weekly trade on the weekly bar. Of course, I take trades all the time on the daily, and I day trade all day long as well. So I have just from the smallest time frame to the largest time frame. And sometimes you'll find that your shorter term time frames are doing well, but your longer ones aren't doing well. Sometimes your longer ones are doing well, but your shorter term time frame. So I just like to have as much diversification and kind of get that cross section and just let the strategies work for me in different time frames. It's very rare that one time frame does horrible, that they all do horrible. So it's just more diversification and balancing, and at the same time using different approaches. If all you did was use crossover trades, then they're probably all going to work together or fail together. But I have about 5 different approaches that I use, and I like in an ideal trading day or a trading month, I would have, 5 trades. Each trade would be a different approach. Each day, each trade will be on a different time frame.
So, well, what are some of the different approaches that you use?
So deep dip is one, obviously, from the name, a deep dip is when you have a large pullback. Usually I look for kind of monster stocks, Amazon, Apple's, big stocks, or indexes. And, I try to buy them, bounces off the 200-day moving average, off the 250-day moving average, off of the 30 RSI. They back test well, like we were talking about ETF replay. They do back test well because, the real key in trading, in my opinion, is risk to reward. So, I look for levels in the markets that should hold where I know buyers are coming in, like the 200, 250 day. Those are some of the most widely watched moving averages. Large financial institutions like to come in when they get down there, because if they're wrong and they buy above the 200-day moving average, but then it closes below, they can just get out quickly for a loss. But if they're right, they could have, 3, 4, 5, 6, 7 times their reward to the upside than their risk. So, deep dip buys, 200-day moving average, 250-day moving average, 30 RSIs. I like crossovers as well. Crossovers is more of a trend trade, right? With all these trades, I always, again, take partial profits on the way up, small partials, but always. I like mean reversion trades, like return to value V1s, V2s back into the value zone. Higher low V1s, V2s are usually the start of potential long uptrends. So, whatever the market's doing, I've worked on a process, I've worked on a strategy so that I have something to work with, regardless of what the market is doing.
That's incredible. You know what? Most people find it challenging to do one strategy. Here you're working 5 and working them on different time frames. How did you go about doing that? Was it all at the beginning? Like, I don't want to assume anything, but did you master one and then add in another and then add in another? What was that? What was the process like?
Well, I would learn a strategy and I would usually tinker with it a little bit so that it kind of fit my personality, right?
Okay.
And then I would say, okay, deep dip buy strategy is great, but look where we are in the market now. We're 23% above the 200-day moving average. So that's not going to come into play anytime soon, right? So I would learn a strategy and go, this is good in this market condition, but we're not in that market condition. I have to learn a different strategy. So over time, I would just learn different strategies. I would tweak them a little bit, but there were probably a couple years there where it took me, I thought about it all day long. How am I going to mix all these strategies together? And it was a little bit stressful because I'd go on my hikes and I'd hike and I'd think about it. But you keep it something long enough and it came together.
That's great. I love it. So when you're you're running all these strategies, you're running 5 different strategies, you're keeping track of them in your head. How would you recommend, or would you recommend somebody have multiple strategies like this? And if so, how would they go about creating them themselves?
Well, I think it is a good idea to learn one strategy first before you take something else on. But when we're talking about 5 different strategies, because of my day trading, I guess I do use all the different ones. But normally, if you're not a very active day trader like I am, you may learn one strategy, master it, learn another strategy, master it. But in reality, you're probably not going to be using them a lot together. Like in a certain market condition, you'll be using this strategy mainly. in another market condition, you'll be using a different strategy. So I think it's a good idea to learn them, but in reality, I don't think you're going to be integrating them all together. I mean, I do because I'm an active day trader and I get all sorts of different types of things going on. So, but just like an instrument, if you want to learn to play 5 instruments, it's probably just the best to learn one, get good at it before you move on to another.
And I'm curious too now. So how do you do all this in, I assume that you have different accounts, but like is each strategy in its own account, or is there one master account?
No, there's a master account. I mean, I have a YouTube channel and I trade and teach and mentor every day live, right, during the last hour of the market, and people from all over the world. And a former student of mine who's a great coder, everything that I taught him, all of my approaches, he coded it up. I mean, he coded it up, and it constantly scans the market all day long. It gives certain points if you have this indicator or you have this trigger or this setup, and it not only looks at like the daily to do that, but it also looks at the weekly in it. So it gives a score to the daily setup, it gives a score to the weekly setup, and then it aggregates them together. And then I get a report of that every day, which is just great. It's like a report card saying, oh, these 4 stocks here have the most confluence of setups, because I'm a big believer that you need to have a confluence of indicators and setups happening at the same time. Because if you have a deep dip buy, but you also had an under 30, over 30, and then you had a double bottom with the bullish divergence, something like this, it gives points to all of these different approaches. And in my opinion, you will dramatically improve your chances of having profitable trades if you're in the company with as many other buyers as possible. Like if you take it to the other extreme, if you're the only buyer and people on multiple time frames are selling, it's going to be very difficult for you to make money. So I like to flip that around. I want to see buyers coming in on weekly because of this setup and that setup. I want to see buyers coming in on the daily because of that setup and this setup. I want to be in the company with as many other buyers as possible, because that's what gives you the best chance of having a profitable trade.
I couldn't agree more with that statement. I do very similar with my own trading. How many layers of confluence are you looking for?
Well, it's usually the 5 different trading approaches that I use. It's in the code of the scan. And, it might find 2 of my approaches that are happening on one time frame on, say, Apple on the weekly, and it might find 2 that are happening on the daily, and it might give it a score of 4, right? So it's just confluences of the different approaches that I use. And I mean, it's somewhat involved. There's all sorts of things that I like that get bonus points. If something goes under 50 RSI, over 50 RSI, it gets a point for that. It's not enough just to take the trade, right? But in conjunction with other setups that are happening on multiple time frames, I always try to pick the one that has the most confluences of setups and indicators lining up. But of course, from a human perspective, I always have to review it, because I'm the one that has to look at the risk to reward. And the risk to reward is, I get reports all the time with huge amount of confluence of signals, but they've run so far, I just don't take them that day, because the risk to reward just doesn't make sense to me at that point.
And what level of risk to reward are you looking for?
Absolute minimum 2 to 1, right? If I'm gonna risk $1,000 on a trade, I have to be able to make at least minimum 2,000 or more to the upside. But I have a pretty intricate. I always have 2 types of trailing, or 2 types of stops. I always have an emergency stop, which is very important. I mean, if it all hits the fan in the worst case scenario, I know how much I'm going to lose, regardless, unless it gaps way through. Of course, you can't do anything about that. But then I also have an end of day stop, where the emergency stop, very rarely do I hit it, maybe 5% of the time. 95% of the time, if I'm wrong, I'm going to hit an end of day stop. And that's the other thing. Other than my day trading, almost all of the trading that I do is based upon end of day trading. I wait till the end of the day to make my buying and selling decisions, because in my opinion, what day traders like myself do in the middle of the day is just noise. At the end of the day, you have the large financial institutions. In that last hour, they really kind of start to wake up, and in particularly in the last few minutes, and they're dealing with the most money. They have very smart people. They have the best information. They have the best technology. And in my opinion, it's really a long-term edge to follow what the large financial institutions do at the end of the day, based upon entering a new trade or getting out of a new trade if it goes above a level or loses.
I'm almost exactly the same as far as like end of day signals. Well, when do you take your end of day signal? 5 minutes to the close, a half an hour? Like, well, what's the window?
Yeah, usually the last 5 minutes.
The last 5 minutes?
Yeah, I mean, sometimes I may have existing positions that are just right above, like if it stays above 100, I'm staying in. If it closes at 99, I'm getting out. And sometimes you have current positions that you're not sure if you're going to get in or out to the very last second, and then you have to add new positions. So sometimes, with 10 minutes to go, I'll just start to get to work because I won't be able to do it. And I manage several accounts, so I have to switch back and forth, back and forth, back and forth. I'm not really sure how I do it, but I haven't missed many trades. Sometimes I cut it 2 or 3 seconds to the close.
How many screens are you working on? Like, it sounds like you would need to have like an entire flight deck with everything that you got going on.
When I first started and I had no clue what I was doing, that's what I had. But now I just have 2 screens. I have the screen for charts, I have the screen for account, and that's it. And I do the podcast while I'm trading too, for extra layer of difficulty points.
That's impressive. That's impressive. I'm running the chat room, and I've got 6 screens, and that's sometimes that feels like it's not enough.
Oh, really? Yeah, these 2 work well. Yeah, I'm looking over here, and position sizing based on current market volatility. That is a really important thing, I think, that we should maybe touch on, because especially with the volatility that came into the market yesterday, in my experience dealing with new traders, most new traders and a lot of experienced traders really don't adjust for the volatility of the market. They may buy a set amount of shares or just a set dollar amount. I'm going to buy $20,000 worth of stock, regardless of what it is, regardless of what the market volatility is. But if you're buying $20,000 in a position and the volatility is just kind of level, just give it a number of 1, then that's fine. But if volatility increases by 3 times, even though you're still buying $20,000 worth of stock, it's essentially like you bought $60,000 worth of stock. So I don't see people adjusting for volatility. So when volatility picks up, buying fewer shares, and when volatility reduces, buying more shares, so they can kind of try to just standardize their maximum loss. But with the market having gone down yesterday, I just thought that was a good time to bring that up, because volatility, has started to increase now.
Yeah, it was really interesting, and I saw that too, and yesterday was an outside reversal day on the indexes, and I have this little script that highlights all of the outside reversal days, whether they're positive or negative, and I looked at what happened over the course of the past year with outside reversals. And when I would tend to see this kind of action in real time, it's something that would used to scare the hell out of me. And it tends to scare the hell out of a lot of people. But when I look back over 2020, the vast majority of them, we ended up with action like today, where
Right back up.
pretty much,
Yeah.
or either right back up or just, you know, continuing to move sideways. It wasn't where you got this massive slam down, which is I think the fear.
Yeah. Well, this year has, been interesting. I think there's a lot of thought about, the Fed having the markets back and having a put in place for the market and so forth. So, you know, this year was, or last year was straight down basically and straight back up. Not a lot of play. But again, just because it's happened recently, recency bias, we have to look at many years, not just recently what happened. It's the way.
Right. Is the news something that you factor in? Like you mentioned, like the Fed having the back, like that's kind of like similar to.
In my mind, I want to have it factor in, but when I'm like, Greg, stop it. Just trade your plan, right? Trade what you're supposed to do. I position size for what the market's doing. I set my emergency stops. I know where my end of day stops are going to be. I know where my, next day's profit targets are going to be. I know overhead resistance, RSI levels or moving averages. If those get rejected, I'll take some partial profits there, maybe take off half. But I really try not to factor in the news whatsoever. I try not to even really look at the news because I don't want anything to influence me because, ultimately the market is going to do what it's going to do. And I'm a price action trader. I follow what the price does, not what the news is talking about. I mean, I remember I sold some puts on Alibaba, and a student of mine said, "Doesn't this recent news about Alibaba and China concern you?" I'm like, not enough not to take the trade. I still like where I'm selling the puts. If it gets down there, it gets down there. I mean, I lighten up, and sometimes I will get rid of positions going into like a FOMC meeting. I never hold any positions through earnings. That's a hard and fast rule. I just never do that. So that's kind of adjusting my position based on news because the earnings are going to be news. But as far as just news in general, outside of earnings or FOMC meeting, no. Although I did adjust a little bit the night of the election. Actually, I did that too. So if there's a huge, big news event, I'll lighten up or go flat.
So, because you mentioned that you have the deep dip buys, right? Like off of the 200-day moving average. So like that, how long of a term is that trade for you? Is it a maximum of 3 months because you're not dealing with you're selling before earnings? Or would you hold that kind of a trade longer?
So my favorite dip buy trades that I buy come on indexes. So that I don't have to worry about earnings.
Got it.
So, if I will take a deep dip buy on Apple for sure, but I will get out regardless of where it is right before earnings. But the majority of my deep dip buys, I really kind of focus on indexes. So I don't run.
Yeah, that's a good strategy.
Yeah. And, and I use deep dip buys on different time frames as well. So, I trade deep dip buys on the 5-minute or the 39-minute as well, because on the daily, we're not even close to the 200-day moving average, but on the 5-minute or 39 minutes, we get there all the time. So it's just a level. It doesn't mean it's going to hold, but to me, it's a level that people look at where I feel pretty comfortable some buying is going to happen. And if it closes below the 200 and back over the 200, I will get in. If it closes right back under, I just quickly take that first easy loss and get out. And if it stays above and trends, then I manage the trade with my profit targets and and trailing stops from there.
Mm. I want to, if it's all right with you, I'd like to open up to the audience to take some questions from you guys.
Yeah.
We've got a little bit of time left, so if whoever's here that's watching live, type into the chat any questions that you have. While we're waiting for that, it is early January 2021. Do you have any trading New Year's resolutions?
Yeah, and it came from your book.
All right.
In that I want to, well, a couple.
Okay.
The first is I want to get even more particular about my entries.
Okay.
And in regards to your book, I have to look at my trading beliefs and my beliefs about the market, because honestly, right now, my belief about the market is that it's in a bubble or way overextended and so forth. And I'm really working hard to just keep taking the long positions, even though my mind doesn't think it's a good idea, but I'm just putting that to the side and I'm just taking the trades because that's what the price action is telling me. So, you know, we trade our beliefs, we don't really trade the market. I'm just trying to work on trading the market more, less beliefs.
Oh, why is entries? Why did entries? Why is that one of the resolutions to focus on entries?
I just think that the better the entry, the more confluences of the entry, the better off you have for a profitable trade. So, you know, I said this in my live stream the other day. I said, you know, one of my New Year's resolutions is to be even more specific with my setups and larger position size as well.
Yeah, well, one of the things that I'm trying to do as well, as far as entries and exits go, and it was something that one of the people in the Jack Schwager's new book, Unknown Market Wizards.
Yeah,
Have you read that one?
Yeah.
Fantastic. I loved it a lot. I have the Audible version. Someone in there had mentioned, and I've heard this before too, that when you go back and you're doing a post analysis, it should be clear as day where you took your entry and where you would set your stop. Like if you're looking at the chart from a year ago and it's like, why did I get in here? That you're getting in or you're setting your stop at the wrong spot.
Right. I remember that part. Yep. I remember that part for sure. And when I listened to that, what came to mind, to me at least, was it was probably a confluence of an under 30, over 30, rejection of the 200. So you could look at that chart very long term and go, that was my entry. Because it's so clear where those entries are.
Absolutely. We've got a bunch of questions coming in. Let's see. First question is from Genesis. Would you suggest kind of zoning out from too much noise and just focus on your own strategies until you get it right?
Maybe you could read it one more time, please.
Would you suggest zoning out, so like just kind of blocking out like all the noise from other strategies and just focusing on one until you get it right, or on your own strategy until you have that nailed down?
Yeah, I think so. And an exercise that I do myself on the weekend just for practice, and I suggest to my students and I suggest to everyone, is if you have a trading platform that lets you, you know, if we're looking at a chart and we have the right-hand side of the chart, if you can go back in time, just randomly go 3.5 years back, I'm able on my charts to just hit a button and it will just show the next day and then the next day and then the next day. So I can just take simulated trades, right? I can just go through the chart, take simulated trades and go, okay, this is the trade I would take. So set my emergency stop, end of day stop, and then just see day by day how the trade is working and how you would manage it. And I do that on the weekends. I do that with students, but in reality, you trade once a day, 220 days a year. But if you can do simulation trading, going back in time, just day by day by day, you might be able to trade 2 years worth of trading experience in 3 hours, right? It's just getting more repetition and more repetition. Just like if you're a poker player, I know some really good poker players that play simulated poker like 1,000 hands a day, just so they get more experience and more repetitions. And your mind will take in the different patterns and what worked and what didn't work. Does that make sense?
It makes a lot of sense to me. And then, well, transitioning from a demo environment into a live environment, I think that some traders that go that route feel that, yeah, I've mastered this, and then they go all in with their full account or whatever money that they had that they would be trading with, and then they get a rude awakening, like, why isn't this working? And it tends to be those money beliefs that are brand new and that they haven't been exercised yet. So, what I often suggest, absolutely start with demo. I wish that I had started with demo. I didn't. I basically made every trading error that somebody can make, I feel. But once you're getting off demo and going into live trading, start small. Start with 10% of whatever your amount that you were going to use was, or use the amount that would not kill you if you lost it, but it should sting a little. It should sting just a little bit if you lost it. That way you're getting that little taste of exercising that muscle.
That's right. And another suggestion is, most simulated accounts, they come with the standard $100,000, or you can put $1 million, in the fake money.
Mm-hmm. Yep.
And then you get used to trading $250,000. But in reality, when you go live, you've got 25,000 in there. It's totally different. I would suggest demo trading is great. It gives you reps, but put in the dollar amount in that demo account, the same amount that you're actually going to trade, so it's apples to apples.
That's a great suggestion too. I like that. Question from Juan. I have difficulties determining position size when adding to winners after I've already taken some profit off the table. Any thoughts or feedback that could help overcome this?
For me, that's a little hard to comprehend because I trade completely opposite of that. I never add to winners, right? I'm always taking off some portions as it goes up. I mean, the way that I position size, and maybe this will help Juan, but the way that I position size, I first determine what is my maximum allowed risk. A good rule of thumb, people use 1% of their capital, right? So if they have a $100,000 trading account, 1% is $1,000. That's their maximum loss. I then divide that by the value of the 2 ATR. That tells me exactly how many shares to buy. Exactly, it shows me exactly where to set my emergency stop, and it accounts for volatility. So that's, if you're using the 2 ATR, I think is wonderful because it accounts for volatility. It gets you outside of noise. It gets you 2 standard deviations away from where you are already. So if it does go down there, you really know the trade is not working. But as far as his question, he has difficulty position sizing when he's adding to
winners.
Adding to winners. I think I would fall back on using the 2 ATR. It's on most trading platforms. Most people just have a 1 ATR. They just see what the average true range is over the last 20 days. I just double that. And on most platforms, you can have a 1 or a 2 ATR. I would just, if he is kind of pyramiding up and he enters here and then he gets another one here, me personally, if I had to trade that way, I would do the same thing. when I was ready to add my second position, I would still take my my maximum allowed loss, divide it by the value of the 2 ATR, and it would just tell me exactly how many shares to buy. The 2 ATR is like a wonder tool for me.
Yeah, I'm similar in that regard too, and I think that an actual real example that just came up today that's setting up again, I feel, is Zscaler. Ticker is ZS. It had broken out. I had sold some into profits. It started to pull back. It's close to an original pivot area around 189 and change. And now it on a daily time frame, it appears to be setting up again where I would potentially look to get in at about 203. So for me, what I'm doing is, yes, I'll have my original breakout, play that breakout. Should it set up again, then I'm analyzing that trade as if it's a brand new trade, and then deciding from there, how much do I want to add to that? And also using the level of profit that I have in that trade to help finance the add-on.
Oh, I see. To finance, so you're using the profit that you had in the previous trade, and you factor that into when you add a second position on.
Right. So let's say I'm up 2R on a trade. It pulls back. It sets up again, and now I'm down to 1R. Well, if I add to that trade, should it break out, then I can add to that position and just risk the profit. So if it pulls back and I get stopped out, then the trade's just unprofitable. If the trade continues to run it's kind of like doubling down.
Yeah,
on the trade. Well,
compounding your profits.
Yes.
Compounding the position by risking profits on the previous move.
Yes.
Not original capital.
Yes, that's a great way to put it, and far clearer than I made it. Thank you. Question that William Sanchez is asking. He's asking about V2. I'm not sure about this, Matt. Maybe can you please explain the V1 and V2 strategy? So
V1s and V2s are a huge part. They're entry triggers for me. They tell me to get into a trade, and it's a little hard to explain without a chart. But a V1, essentially, I need 1 day bar. I need the next day bar to wash it out and then come back and close above that day's close. That is called a V1. A V2 is where you have a bar, you wash out, but it doesn't close above that day's close, but the next bar closes above day one's close. So a V1 incorporates 2 bars, a V2 incorporates 3 bars, but it's an entry trigger that I use, taught to me by Kerry Lavorne. I use it all the time. It's probably my main entry trigger because it shows me already with the false breakout from that previous bar. So if you have a bar that goes down and then back up, it's told me that the market has already tested that level and didn't like it. And doesn't mean it can't go back down there in the future, but it's good time sensitive information to know that, hey, just earlier today, it tested this level, didn't like it, and went back up. I mean, that's a very, quick explanation, but on my YouTube channel, Gossett Trading and Mentoring Live, I have a playlist called Lessons. Mm-hmm. And I have kind of quick lessons about many of the different type of trades that I have, but I get this question so often about V1s, V2s, and it's totally free. It's on YouTube. Just if you go to Gossett Trading and Mentoring Live in the lessons playlist, look for a lesson called V1 and V2 entries. And I spend about an hour in explaining it and showing graphically what they are. But I would be lost without V1s and V2s. They're such a mainstay of my entries. I look for setups. I need something to set up. But then once it sets up, I need an actual entry trigger to enter me into the trade. And the V1s and V2s are what do that for.
What do you mean by taking a little off in percentages, or can you add a little bit more clarity of taking a little bit more off in percentages or number of stocks, and how much of a gain do you want to see before you're taking a profit?
I want to see, so today, in my profits, or I'm sorry, in my positions today, all the business positions I have today, I will take the closing price. I will look at the value of the 0.45 ATR. We talked about 2 ATRs, but this is smaller than that. This is just 0.45. So I'll take that value, a little less than half of an ATR worth of distance. Mm-hmm. I will add that value to the closing price. That will be my first profit target. I'll take the first profit target, add the 0.45 onto it. That will be my second. I'll take the second profit target, add the 0.45. That will be my third. And the 0.45 values change based upon volatility, but it's very easy. I take 10% of whatever my position size. So if I have 1,000 shares of something, mm-hmm. tomorrow I will set 3 limit orders of 10% of that. I'll put 10% of 1,000 is 100. I'll put 100 shares at the first limit order, 100 shares at the second limit order, 100 shares at the third limit order. And then if I hit all 3 of those, then I'm going to have fewer shares. I'll only have 700 shares left. Then I'll take 10% of that and I'll put 70 and 70 and 70. So I take 10% of whatever shares I have that day. Then I add the 0.45 ATR to the closing price. That's my first profit target. Add it again. That's my second. Add it again. It's my third. And that's how I do it. It's very simple, but the 0.45 is interesting because it's right before the half ATR and there's resistance, just like Fibonacci at 50%. That's why I use the 0.45, meaning the next one would be 0.9, meaning the next one would be 0.125. So, I mean, I know that's maybe a little technical and a little complicated, but even if you were just to use 1 ATR from today's closing price, if you just took the value of 1 ATR, stuck it on there, and that was your profit for the next day, that would work fine too. There's pluses and minuses to everything.
And I want to be respectful of your time. We're getting close to the hour mark. Okay. Can you tell us a little bit about the one-on-ones that you do and that you offer for people?
Yeah, so I teach one-on-one in the evening time via Skype. I think the best way to learn is one-on-one. That's whenever I've gone to someone, I've said, I just want one-on-one. I want to learn. I want to be able to ask questions immediately when I have them. So yeah, I do teach a course. It's 15 hours, 5 sessions. Each session is 3 hours. So they're pretty long. They're pretty intense. And I teach all 5 of the strategies that we've talked about here. And, basically I have you teach it back to me. I throw curveballs at you to see if you really understand it. And then, like I said before, we do just simulated trades where I will do them at first. Where's your emergency stop? Where's your profit, or where's your end of day stop? Where's your profit targets? Where are some of your trouble points, red flag points that you may have to get out of half of your position? But I think they're really good lessons. They're long form, but in order to learn something, I think you just need repetition, and that one-on-one. And, if, you can't do the private lessons, I totally understand. But, in my live stream that I do every day on YouTube, it's during the last hour of the market, Gossett Trading and Mentoring Live. I teach and trade and mentor. I teach everything that I teach in the private lessons on that platform on YouTube every day. So, if you can't afford that, or that's not something you're interested in, you can watch the videos, the free videos I have in my YouTube channel, or just come to the daily live stream and I explain it there as well. It's just not one-on-one there, obviously.
That's a fantastic. You have the live stream that's every single day. And what time is it again?
It's Monday through Friday, and it's during the last hour of the market.
Amazing.
So I usually trade and teach and explain why I'm taking trades and where I hit profit targets. And then after the market closes, kind of what everybody in the group does. They tell me their trades. So I keep a record on the charts of all of their trades so that it kind of keeps them accountable and so forth. And then I answer questions for about, 20 minutes after the close as well.
It's so important to, if you're following anybody, I think that it's so important to not just understand what they do, but to understand why they do what they do.
Yeah.
It's great that you're doing that for people.
I enjoy it. We have a really great group. We have some excellent traders. I mean, really good traders. I feel like I'm about middle of the pack sometimes. I mean, they're really, really good traders, from all over the world. And, we're so lucky to have my student, Kamal, that wrote the scanner. And so we pick through the scanner, we look for the trades. It's a great group. It's no nonsense. It's just nice, polite, serious trading.
How does it feel for you as a teacher when you see students surpassing?
I don't have any issue with it. I mean, most of the ones that are surpassing were my students, so it makes me feel good. But in reality, I actually talked about this today. Everybody has their day in the sun. Sometimes I'll have the best trades, and then it will switch to another person, and then it will switch to another person. We have a lady in there called Ava, which just has amazing trades, but they're just in sync with the market at the time. But it just kind of moves around. We get hot, we get cold, because we don't all take the same trades.
Yeah, it's funny. Well, I am never more proud than when I start seeing people excel and to. Even and it's them that's if we're just this much of somebody else's success, I think that it's an amazing thing, and it's an amazing thing to see other people blossom. And
I 100% agree. I mean, it's very fulfilling. It's like your bodybuilding student in your book.
Yes,
right? You sat down with them, you had a little talk, you asked him a question in a little bit roundabout way, and he was like, no, man, I warm up with that, right? But it made the point.
Yeah, there's some other people too, when you start to see other people having better returns, that's the point. I feel that the market is such an endless stream of opportunity that we're not really competing with one another, right? Like we could all be here, we could all help one another get to exceptional levels, and the work that you're doing is amazing, and everybody should tune in to your channel and take part in the knowledge.
Yeah, I think thank you for that, but I think they would like it. I definitely think they would learn something, and it's totally free. I'm not trying to sell you anything there or anything. I mean, I started this channel to just share what I've learned, because I knew how kind of lost and how kind of like I was telling you earlier, I'm learning different. How do I put them together? I don't quite know. There was a lot of angst, a lot of long walks and angst about how I was going to meld them all together. But, now I've done it.
You never know when something's going to click, and somebody might say something just a slightly different way, and then you get that spark.
100% right. 100% right. Just saying it maybe a little bit different one day. I do a little section on trader psychology every day. I basically say the same thing every day, but just different ways, because I'm hoping that one day, one way I say it might resonate with somebody and people will kind of get that aha moment.
Well, it's been an absolute pleasure having you with us. Thank you. Thank you for being here. Thank you for kicking off 2021 with us.
Oh, thank you for having me. It's an honor, a privilege, and I always like watching you on Twitter and following you on Twitter, and you have a great book, and I think everybody should go out and get it.
I really appreciate that, and everybody should go check out your channel. And by all means, just talking to you for an hour, I can tell that you're a fantastic mentor and coach, and able to answer a lot of questions and willing to go deep with people. So definitely go check out Greg Gossett's channel and one-on-one and everything that he's doing.
Thanks, Michael. I appreciate it, my friend. And good luck with the book, and good luck and hope you and the family are doing well.
Thank you. Likewise. All right. Take care, everybody. Thanks, Greg.
Thanks,
and we'll see you next time.
Okay. Bye now.
Bye.
Thanks again.
Wow, that was such an awesome episode, Mike.
Yeah, Greg is such a sweetheart of a guy.
Oh my god, I got so much out of it. I couldn't stop writing down. I'm sure you all were doing the same. All these great, keynotes that we were able to get out of him. All these nuggets of information of how to succeed at the market. It was awesome.
Yeah, I have a bunch of notes here as well. Well, what were your favorite?
I would say my favorite highlight would be the master one strategy first, and then tinker with it to fit my personality. I think that was huge. I love the music analogy with the instruments. Like if you were taking up a musical instrument, it's best to master one before picking up a new one. I know he said he was doing 5 strategies instantaneously, but it was only because he had already done the work to master each of those and then be able to understand how it fits in with the market.
Yeah, absolutely. So many traders try to do too much too fast. Focusing on one thing at a time is solid advice.
And I think my other thing that, especially as a beginner trader, is that even in an experienced one, he had mentioned that on the weekend, try doing a simulated trade. Like go back in time and then be able to try doing a trade. Like pick a company or whoever you want to choose, and then actually do it as if it's in real time to see what the results would be. And that by doing that repetition, you'll be able to learn the different patterns. And then by doing that demo account, actually using like a real life number versus like the $250,000 or some crazy number. Like when you do it in a live trading environment, then when you lose it, it's gonna hurt so much more. So to have like that apples to apples comparison.
Yeah, again, super smart advice there.
What about you? What did you get out of it?
For me, one of the major things was how he made some significant changes to his trailing stops, where he would start to take half off, then half of that, then half of that, as the trade would progress. That's a very interesting way to manage a trade, and it's something that I plan on going and back testing that as a strategy. So there's so many different ways to trade, and so it's something that people may do. Like if you're watching this now, you might say like, oh wow, that's a great idea. I'm just going to go off and do that. Well, what I would recommend is you hear a great idea, jot it down, then go off and test it, see how it works for you, and then start to put money behind it. So that's what I'm going to do next with that idea.
That sounds great, yeah. And
the other thing, great highlight that Greg said was needing confluence among different indicators and setups. I look for the same kind of thing. I like to have all the different stars align, with the knowledge that we're never going to have all of the stars align on every single idea, but the more that you have, the better. So we're not trying to take any trade. There's thousands of opportunities every moment of every day. We want to try to focus on the best ones, and the way to do that is to line up those levels of confluence. So great advice for beginners, great advice for our veterans.
This is great. If you want all 10 of our main key light notes from today's interview with Greg Gossett, be sure to check the notes section of however you're consuming this today. And we're so happy you joined us. This was such a great first interview. We haven't killed each other, which I can't believe. But...
Oh my God, yeah, there's a lot in the outtakes, but
the blooper reel.
the blooper reel. But yeah, well, we really hope that this gave your trading the jumpstart that you need, and now take it and run with it.
See you next time. Don't forget to subscribe to the channel. We'll see you soon.
Take care, everybody.